Alright guys, so we're going to be talking about volume today, and I think volume is one of the most overlooked indicators in the market, simply because it's so widely used by everyone. I mean, pretty much anyone who trades has volume as an indicator. And I think people overlook the fact that volume is just not there as, a bunch of red and green bars. It actually means something, and it's pretty important. And what we're going to talk about today is how to use volume and gauge it to determine whether your trades are going to work or fail. And this is on the long side as well as the short side. So you can use this for both sides of the trade. And it's really about whether the volume's coming in or not. Because at the end of the day, when we're taking our setups, whether it's a flag or inverted cup short, what we want to see is an increase in volume on that trigger. That's what's going to tell us that, okay, traders are coming in here. It's clearly the right trigger, and I can hold on to this position comfortably, and it's probably going to work. But if we don't see that increase in volume, it's a really good sign that traders are not really watching it. Maybe some sellers came in or some buyers came in, and it's probably not going to follow through as much as you'd like, and might even stop you out. So it's important to recognize that so you can actually maybe exit your trades earlier than you need to when the right indicators show up. So we're going to go over XNet here. This was XNet on day one. Great example, had really nice volume, very consistent, had really great setups on the long side, nice flags, and it's been choppy ever since, so I've kind of just avoided it, taking it off radar. But day one was a great day to trade it, and I actually caught a trade on it in the afternoon, and we'll talk about that trade and why it worked so well based on the volume. But let's look at this first off, this morning flag here. So really nice, nice ramp up in the morning here, pulls back, holds that higher low, and we see this flag forming. And notice as soon as it breaks out of that flag, so let's say you're a buyer here. Let's say you bought at 320, you're risking 310, and what you want to be looking at is the tape and the volume, and you want to be looking for an increase in volume. This is so crucial when you're getting into a trade, whether it's a long or a short. You need to see that increase in volume to tell you that the trade is likely going to work. And in this case, this is a picture perfect example on XNet. This is ideally what you want to see on every single one of your setups, where the increase in volume exceeds the previous volume of the day. So look at this volume, it nearly doubled the morning volume bars, and obviously it worked very well. Now what you want to watch for after that is you want to watch for consistent volume. So notice how the volume stays consistently big here. It never really drops off very much. It just stays really consistent. We get a nice 80-cent run from 320 up to $4. So that's an awesome like 8-hour trade right there. And it was all because of the volume. This is the number one reason why that trade worked. And as many of you know, volume is essentially traders coming into the stock. And that's what drives the stock's price. You can have the best setup in the world. It can be the picture perfect setup, but if the volume's not coming in, the trade is likely not going to work. So you have to recognize that, and we're going to go over some examples of that after this. But for now, I want to show you examples of good volume and examples that actually work and follow through due to the volume. So another setup here on XNet, we had an afternoon long right around here. This is the trade I took, and again, beautiful setup. The volume just came in and it ended up working really nicely. We got another nice about 80-cent rip, so around 380s to 460s. So it was another beautiful rip, and it worked because the volume came in. That's the number one indicator. Now another important fact to notice is, let's say for the long side, for example, you see that increase in volume. Let's say you got in long here. You want to see a decrease in volume on the red bars. That tells you that there's fewer sellers. Maybe it's just profit takers, and there's not really an aggressive seller there. When you see something like this, see this big red bar, that's usually a bearish indicator. There's a heavy seller coming in. Maybe short sellers are really piling in. And this usually indicates the reversal of a stock, that big increase in volume on the flip side. So you want to be careful when you see these kind of volume bars. So this would have been a red flag for me, and I probably would have been on alert mode, but it actually ended up still holding, never really crashed, and then continued higher the next day, obviously. So those are some things to look for when you're in a winning trade. The volume, consistent volume, increase in volume on the breakouts, consistent volume, and then lighter volume on the pullbacks. That tells you, okay, there's just profit taking. I don't need to worry. I can stay in my trade. So those are some good examples there. Now let's look at some examples that don't work so well, and due to the poor volume. And we can look at CLVS here. So CLVS is a great example of a stock with really poor volume, and clearly it never broke out because of that. So we did have some flag attempts here, pretty heavy volume at the open, and then it completely just faded off pretty much throughout the whole day. We never saw a big increase in volume. So that just tells me longs weren't interested. Traders were just not interested in this ticker for whatever reason. And that is what it is. They just weren't interested. So here's an example of a flag right here. On a typical stock, if we see this flag, pretty decent setup, right? We got a clear risk here. It failed to break down here. So it's still holding, maybe trapped some shorts down here, then reclaimed the VWAP and held a higher low right around VWAP. And then it attempted to break out right here. But again, notice the volume, very, very weak. It did increase, but very, very light volume compared to the morning volume. Pretty much the same volume has been trading throughout lunch. So pretty much no volume. And let's say you jumped in long here, 230, 433, let's say 433-ish. So you're risking off that 427 level, and you see the volume, you're watching it, and you see this volume's just not coming in, and you see a hard reject. That's a pretty good sign that this thing's not going to follow through. So there's really no need to stick to your original stop when you're noticing that the volume's not coming in. If you notice that immediately, why not just exit the trade right away, right? You don't need to wait for the stock to stop you out when it's very evident the volume's not coming in, traders not watching this. If they were, this thing probably would have ripped at least towards the 440s, towards those highs. Then maybe it would potentially get some more volume. But again, no volume came in. That's your indicator. Just, good indicator to cut the trade off, and it's probably not going to work. So again, we go through this chart pretty much the rest of the day. It didn't do much, simply because the volume never came in. And then probably some short covering. Shorts probably got impatient from that. This 416 level just would not break, so they just, hit the offers and got out before the close. So that's an example of when a trade doesn't work. And let's look at another example of a trade that does work, but now for the short side. So for the short side, it's exactly the same concept, right? We're just looking for that big red volume, so big sellers, big increase in red volume to come in. And I believe we had a signal on this one short right around here, so on this day. And notice initially on the break of this level, we did get a nice increase in volume here. Nothing too crazy. It looked okay, and then all of a sudden we got a really, really nice increase right here, which pretty much exceeded all these morning volume bars, all these candles. And that's a really good indicator that this thing's seeing some real sellers, and it's probably going to follow through and continue. And as we see, it did continue much lower here, because we did get another increase in big volume right here. So it bottomed out right around the 190s. So again, really good signal right there. If you took this short, you watch the volume came in a little bit there, and then the volume really, really came in here. Good indicator. You can hold through this bounce, and then boom, watch the volume increase again on the downside, just like that. So that's your indicator. And again, notice when the red volume came in, it did bounce, but look at the volume compared to that red bar. It's a lot lower, and it's decreasing. So that's usually just a sign of maybe profit taking, some dip buyers, nothing too crazy. But that's perfectly normal, and that's what you want to see when you're trading the downside. So decrease, lower volume on the pullback, so lower volume on the green bars, big volume on the red bars. Again, same thing here. Big volume on the red bars, lighter on the green bars. In this case, this thing did bounce pretty aggressively from those lows, just probably because so many shorts are stuck in this thing. I can imagine swinging this. It's been a multi-day runner, so you know that's not too uncommon to see, but really nice move from that short. So, and it's all because the volume came in. So there's actually an example on the long side on AGRX that didn't work, and we took this trade a few days ago as well, I believe, and let's discuss why that one didn't work. So it was on this day we took this long. This was a nice flag. So we see that this stock had a really nice deep pullback. It looked like it was pretty much done for the day here, but it managed to bounce all the way back and actually reclaim these support levels, which is super bullish. So typically we love to see this as a long trade, and then it set up a nice flag right here. So this was our buy around 180. We had a risk level here around 174. Now look at the volume. So you jump in at 180, recognize the volume, nice increase there. So we're looking good so far, looking good, big increase right there. Not as much as the morning volume. Ideally, we would want to see a volume bars maybe 600K, 800K. So to match that morning volume, ideally exceed it, but we didn't see that. We did see an increase in volume, but most likely just shorts, some shorts covering, and not a lot of longs came in. So as you can see, the follow through just wasn't there. Slight increase in volume, it tried, and then the volume kind of just died off and never really came back for the rest of the day. And then we had a big increase in red volume right here, which is usually not a good sign, right? So that trade didn't work simply because the volume wasn't there. You know, maybe traders were not watching it for whatever reason. But you know, these setups, it was a good setup, nothing wrong with it. You just have to gauge whether the volume's coming in or not. And in this case, you could have stopped out earlier when you recognize the volume's not coming in. So you don't have to hold until your stop loss. You recognize that volume is just not there. You know, you can take some profits, take some early profits in anticipation that the trade's likely not going to follow through, and then you can cut it off before your stop loss if you'd like. So that's totally up to you, but that's what I would personally do, because I've seen this so many times. When the volume just doesn't come in, you know, the trade is likely not going to work. So in my eyes, I see no reason to hold on until it stops me out. So this is why we like to focus on higher volume stocks. You know, the higher the volume, the more people are watching it. The more people are watching it, the higher odds that the patterns we trade are going to play out. You know, if not many people are watching it, doesn't matter how good our pattern is, you know, the odds are likely going to fail on these lower volume stocks. So it's really, really important to watch the volume, watch that tape as soon as you enter the trade. You want to see an increase in tape speed. You want to see an increase in that volume. You want to see ideally bigger volume than the morning candles, the morning volume. And that's when you're going to get the best follow through and the best trades. You know, if you look back at your best trades, your biggest winners, go back and look at the volume. Every single one of them, I can guarantee you, as soon as you got in the trigger, there was a big increase in volume. It was likely as big or if not bigger than all the volume bars on the chart. And that's simply because a lot of traders were watching it and they did the exact same thing you were doing, whether they were sellers panicking or whether they were shorts covering, longs buying. You know, it's all the same, right? But the volume is key, and that's what determines whether trades are going to work or not. So keep an eye on volume on your future trades. It's a really important indicator. It can save you a lot of money. You know, you can recognize when trades are not going to work. And I hope you guys learned something from this lesson, so you can, you know, protect yourself in the future and also hold on to winning trades longer when you see that consistent volume coming in and just pouring in. That's usually a good indicator that stock's going to have continuation and follow through. So thanks for tuning in, guys. I hope you found this video helpful, and we'll see you in chat.